For almost 3 years of me reading PDF, attending webinar, joining trading group, and watching a lot of video on YouTube about how to trade, I always find it difficult to trust in my strategy. I always find it difficult to trust that strategy that I'm trading with. I always move in that cycle of doing, moving from one strategy to another strategy, learning thousands of strategy and how to combine a lot of indicator, learning a lot of things about indicator, learning a lot of things about candlestick, learning a lot of things about support and resistance level, learning a lot of things about fundamental analysis, that is analyzing using news, forecasting, that is forecasting through news. But in all this, I don't still find consistency in my trading. I don't still have any strategy that I believe in. I don't still have strategy that I'm sure of. Then I'm start moving from one strategy to another, one strategy to another. Almost 3 years of me booting around the bush. One day, as I was reading the PDF I have about trading, I discovered I have a PDF about Elliott wave strategy. I pick up this PDF on my phone. I started read this PDF. I read it twice, but I discovered that I don't understand that strategy, because Elliott wave strategy has a lot of rules and regulations that you must follow. It's not so easy for a beginner or someone with a slow learner posture like me. But there's something I discovered in that book that surprised me a lot, is how Elliott can predict the movement of gold. Almost 100 years prediction. How Elliott's wave practitioner that year can predict the movement of Nasdaq for almost 10 years. I was surprised. How could he do it? Without using any indicator, without listening to any news. How did he do it? I sat down and I think, how did these people predict this movement? And surely it come to pass. Then I remember Mr. Elliott told me something, that the price move in two ways. Price move in two ways. And the first way is price move in impulsive movement. The second movement is price move in a corrective movement. Let me say impulsive manner and in a corrective manner. According to my own definition, impulsive price movement is when a price move in a direction without a pullback or with less pullback. It move in that direction in less pullback. Maybe price move from up like this, price move here with this less pullback, and again it starts continuing its movement. Price move here, or I can say price move here, price start move here again, and price move here with a little pullback, with a little pullback, because in every price movement there must be a pullback. But in an impulsive movement with a little pullback, sometimes it moves volatile in that direction. Let's zoom out and let's look at this place. You see how price move here. move up with little pullback, and the second movement is that price move in a corrective manner. According to my own definition, corrective price movement is when price move in a certain direction with a lot of pullback, or when price move sideways. This is what I'm saying. When price starts move like this movement is a corrective manner. This whole movement is a corrective manner. This movement here is an impulsive movement. This movement here is an impulsive movement. This movement here is an impulsive movement. But the whole structure of this movement is in a corrective manner. Another movement of a corrective is when price moves sideways. Hope you is when price moves sideways. In this video, I'm going to show you the fundamental of price action, and if you can just practice hard what I am going to reveal to you in this video, you are going to thank me for the rest of your life. We are in a Nasdaq, we are in the weekly chart. Let's go to the daily chart to see things clearly. Here we are on the daily chart. Let's first do something. In the weekly chart, we are an impulsive movement, very long impulsive movement. So let's draw our trend line. So now let's go to the daily chart. In the daily chart, this is what I'm saying. You have this movement from here. Price starts its movement from this place. Price starts its movement here. This is an impulsive movement, and later price, you see something like this. Price come like this, he went back like this, and he come back like this before breaking out this zone. This is a pure impulsive movement, and this is a corrective movement. Price move in these two manner. You have impulsive move. I want you to remember this. Price move in impulsive manner and in a corrective manner. This is the impulsive manner, and we have another corrective manner. Let's start drawing a line. For price breakouts, and again we see another thing here. Price move impulsive from here, and later we have this until break out here too. So let's start look at how have impulsive here. We have a corrective here. Again, price move here, and we have impulsive. We have another. Now we see something here. Let me show you something here. Price move here impulsively, and again price move down here. correctively, but he move here impulsively. In yes, he move here correctively. This is what I'm saying. That's what I'm saying. Price move here. Price move here. We have little retracement here. He move here. We have some corrective manner here. We have some corrective manner here. We have some corrective manner here. You can see this plate is a corrective movement. We have impulsive here. You have corrective movement here. You can see how price move here. We have go up straight and he come back like this. He went up again. He moved sideways this place. He went down again before going up again. And again price breakout this impulsive, and then he form another. In this place we have one impulsive. From the starting of this trend line, we have a sideways corrective movement. This is a sideways corrective movement. We have impulsive, a sideways corrective movement. Again we have impulsive, a sideways corrective movement here. Impulsive, a sideways corrective movement here. And so even this, but here look at something here. We have an impulsive down here, a retracement down here, but if you look at this retracement, it's in a corrective manner. You see this little movement, price came from here, pull back to this place, came back from here, he pull back, he came back from here, he pull back. Price moved down with a lot of pullback. Compare this movement with this one movement. This impulsive movement here is longer than this corrective movement, but yet this corrective movement has a lot of pullback than this impulsive movement. So this is why I want to show you that in a corrective movement we have two type of corrective movement, and the first one is when a corrective in a sideways, when price correct move in a sideways like this before breakout. Sometimes we may have a lot of touch, but in this Nasdaq it's like we are having two touch before breakout. Again price may move in a one direction with a lot of pullback. Price may go like this, go like this, go like this with a lot of pullback, with a lot of pullback, with a lot of pullback. Again, let's continue. We have another impulsive and we have another corrective movement here. another corrective movement here. Now let's go to the beginning of this chart and let's start looking at it. We have one impulsive movement, two, three, four, and we have one corrective movement, two, two corrective movements, three corrective movements, four corrective movements, and five corrective movements. You can see how price move here. And now we have our trend line. But the movement of this uptrend, price don't just move up impulsively. Price move in these two manner. It move up impulsively, it correct, and later it give us a little correction manner. It move up again impulsively, it correct, it give us a little corrective manner. Again it move up impulsively, it give us tiny corrective manner, and then we have a corrective manner to the downside, a retracement. We can call it a retracement, but it's in a corrective manner. Then price give us this, then we have this. The first thing I want you to understand before I tell you this certain law is that this thing that you just look, I just told you, if you can just go to your chart and just start analyze, identify how the price move, you can just identify how the price move, if you can do this in a couple, like 1 week, you will discover something about the market, something unique about the market, This is just how the market move, the movement of the market. It move impulsively. Now if I want to trade this pair, assuming I am into trade from 2020, maybe peradventure I miss this first trade here. After every impulsive movement, after every corrective movement, there is a breakout. That's the law I want you to remember. After every corrective movement, there is a breakout. And you can look it at here, price come here, give us a corrective manner here, and price breakout. Price move from this place and price breakout. Price move from this place again and price breakout. Price move from this place and price breakout. And again, there's something I want to tell you. In this movement of the price, I told you something, that we have two movements in a corrective manner. We have sideways, price move sideways, and price move in a direction with a lot of pullback. Whenever you are in a trade and you discover price move like this and give you a sideways movement, it is 80% that the movement will continue. It is 80% certain that the movement will continue. But when you discover price come like this, impulsive like this and you discover another impulsive down but in a corrective manner, again price will still continue this movement after every corrective. There's a breakout. A corrective is like a pause to the main trade. It's like a pause to the main trade, but bear it in mind, we have a partner. I'm giving this topic. This is the simplest topic in this program and is the foundation series that you must know how the market move. Simply the market move impulsively and it moves correctively, either sideways or with a lot of pullback in one direction. Let's go to another pair and let's look at another example on it. Let's look at Euro US dollar. On Euro US dollar, we are here. Here in Euro US dollar, we have impulsive movements. We have a little corrective because price went up like this. We come down before breakout, and again we have something like this. And if you look at this movement, it's with a lot of pullback, so definitely price is still coming up like this. But I'm not here to predict. I'm just here to tell you how the price move. So let's start look at how price move here. How price move impulsively from here. And we have this corrective movement. You see the price break out this corrective movement to this place until we have this large corrective movement. So from 2000 to 2022 in the monthly chart of Euro US dollar, we have impulsive movements, first impulsive movements, first corrective movements, first impulsive movements, and we are in a large corrective movement. So now if you are trading Euro US dollar, bear it in mind, you are trading in this corrective movement, which give us a certainty that price is still going up here or even more than this place. So let's go to weekly and see how price move in the weekly chart. Inside this corrective box, we have another thing again. You can see how price move here impulsively down and how price break and how price correct here, but instead of price coming here, price went up. You may be asking a question, why don't price break up? Price ought to break this up and continue its movement. but that is what we call the price structure. Price has its own structure. Price move impulsively, correctively in inside price structure. Again, we have another impulsive movement here. We have a retracement here, but let's look at this retracement and let's look at the manner of this retracement. You can see this retracement has a lot of pullback. It has a lot of pullback. You can see the movement here, the reaction, a lot of pullback here, a lot of. So despite the fact that price moved down to this direction, that didn't say that we are in an impulsive movement. Yes, we are in an impulsive movement. Price move into down direction, but in a corrective manner. We are in impulsive movement, but in a corrective manner. And again, we have another movement here. See how price. You can see this, how it break out. We move again, we have things like this. It break out. Guys, this is how price move. It move impulsively. Now you can see what I'm saying. Because of this movement now and the structure, we are going to talk about the structure in our third video. Then you understand what the structure of the market is. On our third video, we are going to talk about the structure of the market. Then you will know the importance of the structure of the market. With this little movement here, I can predict another movement here, but you are going to know more about it when we are in the market structure. Now today we talk about the market movement, how the market move, and I told you that the market move impulsively. I told you that the market move impulsively. Market move impulsively and correctively, either in a sideways manner or in a direction with a lot of pullback. We can have the price movement like this, but all these are still impulsive movements. After that, we have a breakout if it supports the market structure. If it supports the market structure, let's look at another pair and let's see how the market movement there. Let's go to the daily chart and let's look something. Okay, in this pair now, you can see you have a movement like this. We have a corrective like this, very large corrective, and then we have a breakout, and after the breakout we have another corrective movement. We have a breakout, and now on euro US dollar we are in a corrective moment. So if it supports the market structure now, we are even having another breakout. We are going to have another breakout. So this is something you should bear in mind. The foundation of, I call it the foundation of price action, because the first thing you ought to know about price action is, according to that word, a price action is how price reacts. So if you are going to study how price reacts, we must first study how price move. So now price move impulsively. Always remember this: impulsively and incorrectly. And we have two types of correctively. Correctively, it may move in a sideways manner like this, or it may move in a one direction but in a corrective manner with a lot of pullback, moving in a one direction with a lot of pullback, while impulsively is moving in a direction with less pullback. You can see this movement here. We just have one pullback here, and this is the pullback, but you can see a lot of, yes, market move sideways here. Let's look at this. You can see we just have one pullback here and here, and even it's a tiny pullback that if you don't look clearly you will see it. But let's look at this place. Do you know the market moved down here? It moved down, but if you look at it with a lot of pullback, we have one pullback here, one pullback here, one pullback here, and the price go up. And you see this small movement, we have a pullback here, price go up like this until price break it out. So let's check another pair and see how price move there too. So let's check euro for the last one. Let's go to the monthly charts. And on euro US dollar, on pounds US dollar, you can see something here. You see price movements here, impulsively, correctively, impulsively, and then we have a changing of direction, and in the changing of direction we can see price move down here impulsively, and after it moved down impulsively, you see how price start correcting here, move in a corrective manner, went up sideways, move down impulsively but in a corrective manner. You can see all this reaction here is the corrective movement, a corrective movement here. So let's start doing a little. So now let's look at things. You can see price move here, correct, move here, large, and you see something here. Definitely we have an corrective movement here, expecting breakouts here if it support the market structure. And you are going to learn about the market structure in our third video. We have our first impulsive here, impulsive down. We just first pull back here, but here we have our corrective movement. Let's try to impulsive movement. We have our sideways corrective movement. A sideways corrective movement in the monthly chart. So let's go to the weekly chart and let's look at this. And in the monthly chart again, we have impulsive movements, corrective movements, impulsive movement. We have a corrective movement, impulsive movement, changing of direction. You can see this corrective movement here, and then you can really see this thing. Let's go to the daily chart and let's check this price. So we can see it clearly. You can see it. Then we have the breakouts. Then we have the breakouts here. Until we have another price, another changing of direction in the price. We can still look at it like this again. But remember, there's impulsive here, but let's look at it like a trade. You can see our impulsive movement, our corrective movement, impulsive movement, corrective movement, impulsive movement, corrective movement, impulsive movement, corrective movement. So the price move in this manner, but again, the price move in this manner impulsively, and correctively. You have another impulsively and correctively. This is example of this, but I call this the major movement of price. There is another certain thing I want you to understand. If you see any impulsive movement like this, in this impulsive movement, there's two reactions here. If you see impulsive movement like this, if you go to like if you see impulsive movement here in the weekly, impulsive movement here in the weekly chart, if you go to the daily chart, you see stuff like this: impulsive movement, corrective movement, impulsive movement, corrective movement, impulsive movement, corrective movement. And if you see something like this, corrective movement in the weekly chart like this, you will see impulsive movement, corrective movement, impulsive movement, changing of direction, impulsive movement, corrective movement, impulsive movement, impulsive movement, corrective movement. This is that in every impulsive movement there is a corrective and impulsive movement in it, and in every corrective movement there's an impulsive and corrective movement in it. Like case study, you can see this movement here impulsively. You have a corrective movement here, another impulsive movement here, another corrective movement here. Then we have a large corrective movement here. When we combine it, this is the market structure. We have another impulsive movement, changing of direction. Again, we have another impulsive movement until here, and we have another changing of direction. So this is telling us that this is the manner price you use to move. If you want to study price action, this short video, you can think that this is the short video, but this is the foundation series. I call it the foundation series because if you don't understand this little topic, you won't ever understand anything about this new strategy, and you won't ever understand how you will ever understand price action. The mistake that many of us make is we study support and resistance level, we study chart pattern, but we leave the market movement alone. Like this, we have support and resistance level here. This is our resistance level, this is our support level. But with the knowledge of price movements, we know that this price move down here, price come here, we are in impulsive movement. We know we have a lot of pullback, and we know that definitely the price will break out if it supports the direction, if it supports the structure of the market. If it supports the structure of the market. So first thing that you should learn before learning your support level and your resistance level, all the demand, or everything, the demand, first learn how the markets move. Go and practice, look at how it moves, check couple a lot of charts and look at how the markets move. Check it for the monthly charts. When I first start my research on how price action move, I have my jotter. I will jot how the market move from monthly, the movement we have from the monthly, like this. We have our first movement from 2000. We have first corrective, and again we have impulsive, that is second movement, and then we have changing of direction, third impulsive movement. In the changing of direction, we have first impulsive movement. In the changing of direction, we have first corrective movement, and again we have first impulsive movement, and we have another corrective movement here. If you try to do this thing, you try to do this analysis from this monthly to the daily charts, my friend, you are going to predict like a lot wave. If you can't predict a decade, but you will be able to predict 1 year's, 2 years movement of a price. The secret of Elliott wave principle is the movement of a price. Elliott studied how the price move, and then he told us that the price move in two ways, impulsively and correctively, and this is what we have here. The price move impulsively and correctively. Again, after you understand the movement of the price, our next topic is going to be partner analysis. Please guys, don't miss that next topic. Watch this and go to your demo account, go to your charts, start looking at how the markets move, start combining them together. Our next video is going to be on partner analysis. Partner analysis, there you will know certain time where price are going to change direction, how price are going to move, and our third video are going to be the market structure. These three topics is the foundation series of price action movements. The price movement, chart analysis, and the market structure. Guys, please don't miss it. Go and start looking at how price move in your charts, and happy look forward for the next video. Thank you.